Due to geopolitical and economic concerns, the U.S. has put tremendous pressure on Saudi Arabia to separate itself from China and other BRIC countries. The U.S. seeks to restrict the transfer of crucial technology, infrastructure, and data to China, which could jeopardize U.S. economic interests. However, Saudi Arabia's recent measures, like the signing of $50 billion in memoranda of understanding with Chinese financial institutions, show a clear desire to enhance ties with China. This move is part of Saudi Arabia's overall aim to diversify its economic alliances and minimize its reliance on oil, which is consistent with its Vision 2030 agenda. The agreements with Chinese banks are intended to increase two-way capital flows, including both debt and equity investments, promoting closer economic integration between the two countries. Saudi Arabia's shift toward China is also seen in its increased investment in Chinese markets. The Gulf Fund's investments in China increased to $2.3 billion in 2023, up from over $100 million the year before. This huge growth demonstrates the growing economic connection between the Gulf area and China. Despite U.S. worries, Saudi Aramco's significant investments in China strengthen its position as a vital crude supplier. These accords, the largest since President Xi Jinping's visit to Saudi Arabia, sought to encourage yuan-based oil trade, potentially undermining the U.S. dollar's dominance in global oil markets. Despite U.S. Secretary of State Antony Blinken's claim that Washington is not requesting Saudi Arabia to choose between the U.S. and China, the kingdom's actions clearly show a predilection for strengthening its commercial ties with China. This tendency demonstrates Saudi Arabia's pragmatic approach to foreign relations, which seeks opportunities wherever they occur without being limited by old alliances. In 2023, the trade volume between China and Saudi Arabia was large, showing the two countries' strengthening economic connections. In the first quarter of 2023, their bilateral commerce totaled around $24.3 billion. This included $13.7 billion in Saudi exports to China, predominantly crude oil, and $10.7 billion in Chinese imports, mostly electronic items. China purchased items worth $64.36 billion from Saudi Arabia in 2024. The trading partnership has continued to grow. In May 2024, China's exports to Saudi Arabia increased by 11.8% over the same time the previous year, while imports increased by 3.51%. This continued rise highlights the strength of their economic connection, with major cooperation in areas like technology, logistics, and manufacturing. Use of local money and trade. China and Saudi Arabia have lately escalated their attempts to lessen their reliance on the U.S. dollar in international trade by signing a large currency exchange agreement. This agreement, worth around $7 billion, allows the two countries to settle trade transactions in their respective currencies, the Chinese yuan and the Saudi rial. The arrangement, which will last 3 years with the possibility of extension, allows up to 50 billion yuan to be traded directly without being converted to U.S. dollars. This effort is part of a larger campaign known as D-dollarization, which seeks to reduce reliance on the U.S. dollar in global trade. China has been actively pursuing the internationalization of the yuan, and this deal with Saudi Arabia represents a step toward that goal. The exchange agreement is especially significant given Saudi Arabia's position as the world's top oil supplier and China's position as the world's largest energy consumer. The pact is also viewed as part of the two countries' larger financial connection, which has become stronger in recent years. This collaboration is intended to help Saudi Arabia's Vision 2030, an ambitious ambition to diversify its economy away from reliance on oil by expanding into industries such as technology and tourism. History of China and Saudi Arabia relationship. Historical records show that ancient Chinese dynasties had limited interactions with the Arabian Peninsula, largely through the Silk Road. The formal diplomatic relations between Saudi Arabia and China were established on July 21, 1990. This move signaled the start of a fundamental shift in Saudi Arabia's foreign policy as it expanded its international relationships outside its usual Western partners. The 1990s saw a gradual increase in trade volumes, with the first exchanges centered on basic commodities. By early 2000, bilateral trade grew substantially in 2004. The trade volume between the two countries was roughly $3 billion. This value had risen to $25.4 billion by 2008, representing a compound annual growth rate of over 40%. The relationship grew stronger in the 20th century, owing to China's increasing energy consumption. By 2015, China was Saudi Arabia's greatest commercial partner. Trade between the two countries was $42.36 billion in 2018, with Saudi Arabia accounting for 12% of China's crude oil imports. The economic alliance expanded further, with trade volume reaching $87.3 billion by 2021. Trade totaled $24.3 billion in just the first quarter of 2023. This totaled $13.7 billion in Saudi exports to China and $10.7 billion in Chinese imports. The energy sector has been key to Sino-Saudi economic relations. Saudi Aramco has entered into numerous joint ventures with Chinese enterprises, including refineries and petrochemical complexes. In 2019, Saudi Aramco agreed to develop a $10 billion refining and petrochemical complex in China. Saudi Arabia is an important partner in China's Belt and Road Initiative BRI. This has resulted in major Chinese investment in Saudi infrastructure, logistics, and manufacturing sectors. One significant example is the Red Sea Industrial Aluminium Company's $10 billion investment in Saudi Arabia. The political relationship has been characterized by high-level interactions. Chinese President Xi Jinping's visit to Saudi Arabia in December 2022 resulted in the signing of 35 deals totaling $50 billion in various areas. China has played a moderating role in regional politics, as seen by its support of the Saudi-Iran diplomatic rapprochement in 2023. This demonstrates China's increasing influence in the Middle East. Cultural exchanges have steadily increased, including educational scholarships and tourism. Thousands of Saudi students are studying in China, and there is a campaign to bring Chinese visitors to Saudi Arabia as part of the Vision 2030 strategy. Cooperation in media and technology is particularly noteworthy, with Chinese tech behemoths such as Huawei playing an important role in Saudi Arabia's digital transition. End of the petrodollar deal. In addition to the New Deal, Saudi Arabia has disappointed the U.S. in another matter. The petrodollar deal between the United States and Saudi Arabia, which had been in effect for 50 years, has recently expired. This 1974 deal required Saudi Arabia to sell its oil entirely in U.S. currency and invest any surplus oil income in U.S. Treasury bonds. In exchange, the United States supplied military and economic assistance to Saudi Arabia. The expiration of this agreement on June 9, 2024, allows Saudi Arabia to sell oil in a variety of currencies, including the Chinese yuan, euros, yen, and even digital currencies. This move is crucial because it has the potential to diminish the U.S. dollar's supremacy as the world's major reserve currency, which is supported by the petrodollar system. The reduction in worldwide demand for the dollar may result in greater inflation and interest rates in the United States, as well as a weaker bond market. The termination of the petrodollar accord reflects broader changes in global energy markets and geopolitical dynamics, with emerging economies gaining clout in the growing use of alternative energy sources. Reducing the reliance on oil. That's it for this video. Thank you for watching the video. We sincerely thank you for joining us today. If our work resonated with you or inspired you, please consider showing your support by liking it and subscribing to keep connected with our community. We greatly appreciate your support.